Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day. Bitcoin has broken through the 95.5k resistance, resulting in a short-term rally just shy of 98,000. We are going to be discussing the short-term charts and the impact this recent breakout has had on the higher timeframes. Going over both the weekly and daily charts of Bitcoin, discussing next potential targets, invalidation points, and the overall trend, as well as discussing the total cryptocurrency market, as the total cryptocurrency market has reached just shy of 3 trillion, and of course the total altcoin market as well. Is the market preparing for the next major macro move upwards, or are we going to see this short-term rally fall apart? These are questions we are answering in the video today. Now, before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us in the free Telegram channel with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and really everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment, contacting our admin, checking out our links over here, the first one being a 52+ month trading track record, and the second being a 10-minute video showing you inside the VIP. You'll get access to 2 channels, the main trading channel, where we post trading setups with exact entries, targets, and stop losses, and a variety of exclusive VIP group chats. Check it out, guys. We've been operating for 52 months. We have over 700 members, and we'd love to see you in there. Let's go ahead and jump into the content. So, taking a look at Bitcoin, we have seen that breakout as we were discussing it in yesterday's video. In yesterday's video, we spent the entire video discussing the significance of what was a horizontal consolidation. We discussed that although these are neutral patterns, there is a very slight directional probability in of which the direction the price action enters the channel is generally the direction of which the price exits the channel. And we'll come back to this notion in today's video as we discuss potential next targets following this breakout. The key message behind yesterday's video, and we'll discuss very shortly now, is that the break of this horizontal consolidation facilitates Bitcoin to move towards that next level of high time frame resistance, and by doing so increases the probability that the weekly candle will close above 93.7, which is a critical prior level of support, now current level of resistance. So all in all, a fantastic breakout on the short term here, which if sustains will be fantastic moving into the weekly close. Starting on the market data, 24-hour volume is down a very minimal amount of 0.01% at 207 billion, with liquidations down 39%, 208 million. The majority of those coming from short positions, of course, as Bitcoin breaks through a major level of resistance. Moving over to the DXY, not too much happening here, but we can see we are now challenging that change of character level again. So we added a few annotations in yesterday's video that a rejection from our change of character will result in a continuation, probably most likely into new lows. We're looking at 93 to 92 as macro targets, 6 to 12 months down the line. Provided interest rates drop, we will likely see that. And on the short term, if we see any signs of interest rates potentially moving towards less interest rate reductions or more uncertainty given from the Federal Reserve press conference following the interest rate decision in 5 days, we may see, of course, the DXY push upwards, which could move up to the 200 moving average, marking this drop below 100 as deviation. So a lot of speculation here, guys, with the DXY movements. All we can really do is identify key technical and structural levels, create some plans, but the direction of which the DXY moves is going to be heavily reliant on upcoming news events, which we just simply do not have the results for yet. So it's very hard to say what we expect to occur, but all in all, we can say from a structural perspective, if we do get back above this change of character, for the weekly close, it is likely the new week will continue upwards. If we fail to do so, this will be a rejection and we will see continuations. At the moment, we are testing the change of character as we speak. Moving over to the S&P 500, we have seen the S&P 500 actually come up and reach this next cluster of resistance. So of course, we broke out of this multi-month downtrend over here with that positive momentum shift, which we saw resulting in a rally toward the upside to retest our 200 moving average and our prior level of resistance. As you can see, the S&P 500 has now wicked perfectly right into that level of resistance. Again, prior resistance becomes future support. Again, future support becomes prior resistance, or should I say, prior support becomes future resistance. So we are now retesting this area as a level of resistance, which coincides perfectly with the 200. Again, heavily dependent on what happens with interest rates to determine where the markets will move from here. But the overall notion should be, while we remain above 5,500, we are expecting to continue upwards. If we drop below 5,500, we then expect macro correction. So again, playing not from a level by level basis, more so an invalidation perspective. Bullish until proven otherwise. Expect continuations until key levels of support are lost, and then we expect reversion in the trend. Moving over to economic news, guys, we do have, of course, NFP and unemployment rate data coming out tonight. This is pretty big and it usually does stir up a fair amount of volatility in the markets. As you know, I personally do not trade on days of news events because I do not believe the edge is there, because you're competing against people who get the news, even if it's milliseconds before you, or, you know, hours before you. It's just not worth it in my eyes. I don't believe it is optimal. So I do avoid trading news events for that manner. You're competing against people who just have an upper leg, just have the leg up in those instances with that information. And information is power when it comes to trading. So in this instance, NFP, unemployment data, we're not really going to be expecting too much from that. It is very hard to say how the market is going to respond, but we can say the market is generally quite reactive to this information. So do expect volatility, particularly on and around that data releasing. We do have our big one, which is going to be the Federal Reserve interest rate decision on the 8th of May. That is going to be in around 5 days from now. We do have the probabilities currently massively in favor of a interest rate pause, which is the expectation, and 5.6% in the interest rate reduction. Now, hypothetically, we do get an interest rate reduction, the market will absolutely pump. Okay, if we get an interest rate pause, it is unlikely the market will do anything. It will more likely hold. And what is going to determine whether or not we move up or down will then be the interest rate, the Federal Reserve press conference following. The narrative discussed by Jerome Powell will massively sway the market direction. If they are more bullish, it is likely the market will rally, meaning if they look for more interest rate reductions in the future, we will likely see a rally. If they are still very pessimistic in reductions, it is likely the market will pull back or hold stable. That is it, guys. Let's go ahead and get into the Bitcoin analysis. Now, before we do, if you were interested in supporting the content, supporting me making these videos for you, of course, and of supporting yourself, you can sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. And of course, guys, you'll support me making these videos. So check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get right back into it, starting on the short-term price action. So as we can see here, Bitcoin had a fantastic 24 hours. Not only retesting the low side of this horizontal range at the 200 moving average, confirming in fact a horizontal consolidation was in the making, but we saw a breakout of the range high. Now, with the breakout of the range high, we saw Bitcoin move up to 97,450, just shy of 97,000, and just shy of that 98,000 resistance. But moving over to the higher time frame charts, if we bring up that VRPV really quickly, we can see on the higher time frame, on the weekly, we have really pushed right into that mountain on the VRPV. So we're pushed right into the weekly POC right here, which is around 96.5, which is a critical level of resistance here on the weekly. So right into this resistance range. We didn't push up just as high as we were expecting on this initial leg up. We have pushed up a significant amount. So taking a look at the breakout, of course, the measured move target of the break toward the upside, taking that applied to the breakout, was just over 98,000. So this is going to be the maximal expected target based on the structural formation we had. Now, of course, Bitcoin could exceed that or underperform that. But when we're looking at expectations based on prior consolidations or ratios or targets based on prior consolidations, that is still going to be an expected point of rejection or reversal around that $98.5 to $98,000 region. Now, that is provided Bitcoin is able to sustain above what is now a key level of support. Remember, what is once prior resistance becomes future support. So all of this area here was once prior resistance. It is now going to be an area of current support, meaning this area here at 95.5, this is going to be a region of which Bitcoin will need to sustain above if we want to see the price continue up into 98, into 99, potentially into 100. That means two things. It means, number one, from a short-term perspective, Bitcoin is going to be bullish, provided we sustain above 95.5, and number two, it gives us invalidation, meaning if we break below 95.5, we could expect corrections back into the range low. So at the moment, expectations are going to be, if the price action reverses back to 95.5, we would expect support resistance flips to play out and thus continuations. And if we lose 95.5, again playing off that invalidation method, we would then expect rejections to occur, corrections to occur back towards our range low, with the 200 moving average and the prior higher low acting as validations for steeper corrections. So the same validations we had for steeper corrections before the breakout is still intact. For Bitcoin to correct back to 89, I know there's a lot of people expecting that and still wanting that, for Bitcoin to actually commence that move back to 89,000, we need to see a structural shift. And that needs to be, if we take a look at these lows, so we've got our low over here, we've got a higher low over here, we've got a higher low over here along the 200 moving average. For Bitcoin to actually break this overall pattern, we need to see this higher low break, meaning the price will need to drop below 93,000 for us to commence the move to 89,000. Until that happens, Bitcoin is going to be, technically from a weekly perspective, it is going to be still bullish, because again, 93.7 around about this region of the 200 moving average is going to be that weekly low. So provided we sustain above 95.5 moving into the weekly, it is likely the weekly will close above, or it will close above that range low if we sustain above 95.5. Now on the short term again, provided 95.5 sustains, the expectation should be direct continuations toward the upside. Now how that develops on an immediate time frame price action, whether we see corrections back to the range, support resistance within continuation, or whether we see immediate absorption of any short-term selling pressure, which is occurring as a consequence of the recent breakout, and then continuations, is going to be varied based on how the momentum develops on the short term. So moving down to a smaller time frame here, we can see that the price action has been correcting ever since around 97.4. If we zoom into a 5-minute chart just to get the trends more clear, we can see here we are retesting the 200 moving average. And of course, we do have a general trajectory of this trend over here, a general downtrend developing. So I would say, provided we sustain above this 5-minute 200 moving average, I think it's pretty unlikely we correct back to this 95.5 level. I think it's more likely we continue upwards through these highs. If we lose that 5-minute 200 moving average, I would then expect corrections back to 95.5. So all in all, guys, the breakout was a success. Overall, it is still bullish, expectations are still higher, and the market is looking pretty good, provided we sustain above 95.5 moving into the weekly close. Now, I would like just to add, we do have major economic news coming up with NFP and, of course, interest rate data. These events have the power to completely change the expectations in the market and move the market dramatically in either direction, irregardless of what the technical analysis is suggestive right now, okay? Because remember, TA, okay, is just an assessment of developing trends in the market, patterns, okay, structural data, technical data, which is all a combination of real-time buying and selling in the market, okay? It is the derivative of the price action itself. So it is not necessarily predicting what is going to happen next, but it is telling us what is happening now, what has led up to this point now, and we use that information to then make assessments of what is likely to occur next. But if we get a news event which is completely reactive and is spontaneous, or should I say, immediately enters the public space, okay, and we know people make decisions based on news, okay, we know people's emotions are very tied to how they make decisions in the market, that is going to dramatically and immediately impact the buying and selling of individuals, which then translates, because again, technical analysis is the derivative of that price action, may impact what the TA is suggesting. So TA is fluid, but it isn't in nature, predictive. Nothing is really in essence, truly predictive. We make, logical and, data-driven assumptions based on, whether it be a whole collection of data that you've gathered or historical price action, whatever you want to look at. So what I'm trying to say in layman's terms is, no matter how the price action really responds, these news events do have the potential to alter expectations that may develop. So that doesn't mean we should cast away all expectations and expect nothing. No, you need to still plan and have expectations, but you also need to be aware of at what point your plans fall apart so you can jump ship if you need to. That's only if you need to. Maybe the data plays out in favor of your expectations, and it actually facilitates a lot of the expectations coming to fruition. So we could see the news come out very bullish and the price pushed to 98,000, 100,000, and that's fulfilled what we broadly expect to occur, provided we remain above 95.5. So I think a lot of people like to think news is out to get you, but in reality, the market is incredibly efficient in 2025, okay? It is almost always priced exactly where it should be based on everything that's going on. Any inefficiencies are very quickly found and very quickly corrected in the market. So the market is never really technically undervalued or overvalued. It is exactly where it should be at any particular period of time, and it is your role as an analyst to find out where it is likely going to move based on developing trends and current trends and a whole range of other things. Okay, so let's move over to a higher time frame now. Went on a bit of a rampage, a bit of a ramble there, but I think it's pretty interesting and important information and a different way to look at the market. From a macro perspective, the trend is very bullish. Okay, there's no doubt about that. To keep it simple, if we're looking at the macro integrity of the trend, not short-term expectations and weekly directions, macro integrity of the trend, we need to remain above the Gaussian channel upper band, the 50 EMA on the weekly, and the baseline of the Ichimoku cloud on the 2-week. Okay. The reason I bring these points up is because if we look at when the trend essentially flipped into a bull market, okay, which is about 32,000, about 30,000, these are the levels we broke above, okay? So technically, when we're looking at indications that the trend may be weakening to the point at which the bull market could end, we would need to watch for breakdowns of these respective levels. So the 50 EMA, the Gaussian channel upper band over here, okay, and the baseline on the 2-week Ichimoku cloud over here would be levels we would need to break below to then confirm we're going to see macro corrections. So if we're looking at a macro perspective, provided we remain above these levels, the expectations on the macro are going to be more leaning bullish than they are bearish. Now, if they do break down, if we eventually see these levels break, and we will eventually see these levels break, right? The price will not sustain above these levels forever, maybe in 6 months, maybe in a month, maybe in 10 months, who knows? Eventually, when these levels break down, that will likely trigger the start of a higher time frame macro downtrend, which we need to be aware of. So that is very important. But when we're looking at the weekly chart, of course, we have seen positive momentum shifts, which we indicated to be the point at which we would see a reversal. We can see that occurred on this candle over here, here. And since we identified that positive momentum shift, the price action has risen around 14%. So fantastic reversal predicted here based on momentum. Yet again, it wins yet again. Momentum is one of the only true leading indicators in my opinion. And we've shown you numerous times now on this channel, well, hundreds of times through our videos, how momentum can be leading in terms of projections of where the price is likely to move to. That is just another instance. So on the weekly, we are watching for a weekly close of a 93.7. For the short term, we are watching for this level to sustain. Worst case scenario, support resistance flip, loss of 5-minute 200 moving average, and then reversal toward the upside. Absolute worst case scenario, we lose this level, we lose this low, and we run the risk of correcting back into 92 into the upcoming weekly close, which poses the risk of a weekly close occurring underneath this level. And if that does occur, this would be a lower high, and we do run the risk of steeper correction. So there is still, there's always an axe over the top of your head when it comes to trading, because at any particular point in time, there's always a downside risk, there's always an upside risk, but in this instance, it's about weighing out the probabilities. Let's move over to total market cap and wrap up the video. Total market cap looks pretty good. Now, I do like to note we are approaching a psychological level. $3 trillion, okay? A psychological level of resistance, meaning the market is approaching a overall resistance here. This is something that is good and it is bad. Now, the reason why it is good is because if we are able to break through this level, it would show that we have massive strength. And that massive strength will likely spill over and facilitate a strong continuation upward for Bitcoin, for altcoins, for the broader markets. That is why it's good, because it gives us the potential. It's like you miss every shot you don't take, right? So it gives us the chance to break through and then see this massive, not, billion percent, but like we see a strong rally in price action. We see a moment, a glimmer of strength here for the market, which is good to see. And it's bad because, of course, at any point in time when we rally up to resistances, we run the risk of rejections and we run the risk of pullbacks. So that is coinciding roughly with the interest rate decision, with the NFP data. So we're interested to see how that works out. But again, from an invalidation perspective, sustained above 2.84, 2.83, which is this prior high, we're going to be bullish. If we drop below here, that is when we become cautious and very aware of steeper, higher time frame corrections. The altcoin market, although it's looking pretty decent, we've seen a lot of altcoins break out of downtrends. We're seeing a lot of altcoins do very well. Of course, the leading altcoins are mostly meme coins again. We're seeing altcoins that are underperforming. We're seeing altcoins doing absolutely freaking nothing. We're seeing some altcoins even go down, right? The altcoin market is very segmented. It is not what it used to be. There are thousands of more coins. The market is much more diluted now. A larger amount of money is spread across an even larger amount of options nowadays, okay? So we're always going to see some altcoins do well, some altcoins do terrible, and it's just a constant rotation of money from one altcoin to the next altcoin to the next altcoin, etc., etc. So in this instance, when we're looking at the altcoin market cap from a macro perspective, we're more so looking at context to the market of altcoin, the context. If we are able to break through 840 billion, I believe that is when we will see the majority of altcoins start to perform pretty well. Okay, the ones that are doing very well will likely continue. The ones that are doing very bad will likely do okay. And the ones that are doing okay will likely do well. That is when we break above 840. We are not above there yet. We are at resistance. So we do still run the risk of a correction here if we reject from, just as the total market cap runs the risk of the correction. But ideally, if we see a breakout, we will see some good days for altcoins. So thank you for tuning in, guys. Have a fantastic weekend. We'll catch you on Sunday. I look forward to seeing you all then. Bye.